Trading Market Technicals Morning Call video for Wednesday, May 29th. Interesting day in the markets. Markets ended up closing all green across the board, actually. Dow was up over 100 points, but at one point in time, we were up over 215 points late morning in the morning session, and that just clearly reversed. We had that big pop due to good construction and housing numbers. Consumer confidence was at its highest since 2008. So a lot of good stuff going on, and that's just really throwing fuel into the Bernanke camp to say, hey, you know, if this economy is really going and really starting to move and getting stronger, well, we might really have to start pulling the reins here, our asset purchase program. That's what he mentioned last Wednesday when the market sold off. Then markets have rallied since, and I believe the market participants are saying, hey, you know what, I don't think that's going to happen. So they're probably discounting his accusations of what he's thinking about doing. Anyway, but we did get a reversal. We had a nice reversal yesterday, a slow grind. So the markets did sell off going into the close. Nothing to write home about. It was a very boring day yesterday. However, the reversal is a reversal. Now, when I show you on the charts, volatility has picked up. So when you get volatility at these upper end of the ranges, or for that matter, if the market was selling off and you have volatility start to pick up at the lower end of the ranges, that really starts to mark a top or a bottom. Not saying there's a top yet, but I could probably rest assured by the end of this week, I can probably go out and say, hey, you know what, we may have a top in place. I think the market, and again, nothing actionable here for trading. I'm just saying my opinion, and my opinion means nothing. Just saying that I think that even if the market puts in a marginal high here, even, you know, kind of retest back up to that yesterday's high and then fails, that would give me more evidence to say that we do have a market top. And then we take out 1650 in the S&P cash. 1650 is going to be a big number. If you watch the 1650 area and we do that on a closing basis, and then we start to move lower, then I could say that we might have a tradable top in place. But this week's going to be very interesting, and I'd like to see what happens here the next few days. We do have a shortened week, as you know. We were off on Monday. We're ready into Wednesday. We only have 3 more trading days left, so we'll see what happens here. Interesting to see. Interesting developments, though, I will say that. But I'm really watching the bonds. I'm watching what bonds are doing, and like I said, if bonds really start to really get hit here and start to sell off, well, where is the money going to go? It's going to go into equities, and you might have that one more big exhaustive move to the upside. So that's why I'm just not calling it top as of yet. The markets, the charts are telling me that we may have a tradable top in place. Now, let's get right into the bonds here. You see, here's the 30-year bond price, okay? Bonds go down, yields rise, right? And the markets rise. So we have a break. Now, this is this week. It's only 1 day's price action. So we need a weekly close below this neckline. Now, also I wanted to show you is that this right shoulder, it really doesn't have symmetry like the left shoulder does, right? We have a little bit of chop here, rolling a rounding top here. So this might just pop up here and start to chop around and create that bigger right shoulder and then break. And what I mean by that is if bonds start to rise again and really start to chop around this area and hold this area, well, you might have that little sell-off in equities, that little tradable top that I mentioned. So there's nothing concrete here. But again, what is concrete is bonds are weak and money's coming out of bonds. And there's no question about it, guys. You can see this here. And I think that even if equities start to break down now, and then I think that dip will be bought, and I think we go actually to new highs again. And the only reason why is that there's nowhere else to put your money at the moment, and that's what Bernanke wants. He wants to create that wealth effect for the economy here, and for people to feel comfortable. Hey, my 401k, my Keo, my managed money, everything's still going well, and let's spend. And that's exactly what's happening, so we can stimulate the economy. So, but if you look at the bonds, as you see what I'm saying, we have that head and shoulders pattern, which is a bearish pattern, as we all know. And here's there's our neckline for now. Now, we could actually chop around here and really kind of break down here, and the neckline be somewhere in the 137.50 area. So that actually could happen as well. So again, early pattern, but again, I want to show you what I'm seeing. And if you see that bonds, keep an eye on them, guys. Yesterday, soon as the market opened, bonds started getting crushed. And the bonds do trade pre-market, and they were already down already. So something to really keep an eye on. This is something interesting to see. Now, take a look at the. I want to show you the yield. You know what? I can't for some reason. Where was? Oh, here we go. I'm sorry. Okay, so here's the yield. Here's the 10-year yield, right? The 10-year closed at 2.15%. Okay, now when yields rise, obviously, if it gets really high, obviously the market's not going to like that as well. But we're way, way, way away from that. But I just wanted to show you as bond prices start to sell off, the yields start to rise again. So here's the 2.15%, and as you can see here, yields are rising. So if you didn't refinance your house, you better do it now, because it looks like on the longer term picture, I don't have that in front of me, but if you just take the TNX, you can use that, guys, if you don't have the 10-year yield. You do a TNX, do a monthly shot of the TNX, you'll see a big bullish falling wedge, and it looks like that. I think the yields have bottomed for a long time, and I think yields are only going to be going up eventually. So just keep an eye on that on the 10-year yield. But I just wanted to show you the inversely correlated difference from yields and bonds. And as you can see, when bonds prices are going down, money's coming out of bonds and going into equity. So just keep that in mind. Okay, let's take a look at the dollar. Dollar also had a decent day yesterday. As you can see here, we had that nice big push up higher. And again, if people that are around the world want to invest in our money, they have to buy our dollars. So right now, I think it's still an inverse correlated effect, but eventually that's going to change. You'll see when you get a greater demand, you'll see people starting to have to convert their currency into U.S. dollars. And then that'll definitely rise the equities and the dollar itself. Right now, that's not the case. Right now, it's a safety asset, safe haven asset, if you will, and people will buy that for just to kind of hide themselves for any kind of unwanted volatility in the market. Speaking of that, let's take a look at the VIX. And as you can see here, even though the market was up, the VIX was higher yesterday, higher by 49 cents. So again, a pickup in volatility. That's my theme here for today. You're going to see the VIX start to rise again. And if we take out 15, we're probably going to take a beeline shot to the $18-ish, somewhere around this area here. And then who knows where else would go. But I think this week will be an interesting week, to say the least, in the equity markets. Okay, now let's take a look at the CBOE. Now, we had that big spike up, which was bearish at 125, and then we rolled right back down again at 98, okay, which closed bullish yesterday in the CBOE option put-call ratio. But still, the option markets are pricing in some fear here. So let's just continue to watch it. Nothing actionable here, but interesting to say the least. Okay, now, let's take a look at the S&P cash share daily chart. You notice how low volatility, nothing's going on, little tiny candlesticks, couple of big ones, maybe one or two small red ones, but nonetheless no volatility. Everything's moving according to plan. Boom, we get a break in volatility, candles get larger, and as you can see, the moves start to get larger. Okay, now that to me is saying to me, heads up, possible top. So we want to make sure. Now we need to break right here, 1650. We need to break. This is going to be the biggest area here. 1635, I'm going to call it 1650 right here for the first break, right here. That's where we need to really start to break down. That's where the market's held to the upside Thursday and Friday. We need to break that down, and then, of course, the 20-day moving average, which would come in at 1633. Okay, that's the moving average, and that's also a real big support area. So 1650, 1633 closing basis to look out below, and then I think we start to move lower. But we could pop up again one more time today, tomorrow, and still fail. The big spot is 1680. That's going to be the area of resistance where we want to really keep this market capped. 1680 will be the spot, okay? So let's just keep an eye on these levels for the next couple of days. Spiders, same thing. We held that downtrend, that uptrend line, that upper end of the channel, and we're just here. We closed red, but we're actually, because price we moved lower, but we're still positive on the day here. So again, we're starting to unwind a little bit at overbought reading here. So interesting. Interesting to say the least. Now here's that 30-minute chart that I want to show you. We had that Bernanke speech. Thursday we sold off. We rallied. We gap lower, and then we rallied hard into the close. Like I mentioned, a lot of short covering, and sure enough, popped up again, held R3, and actually failed. And all day we just started grinding lower and lower and lower. And then again, guys, we popped into the close for some short covering. So just want to show you where the price action is here. Last week we had some great price action. As far as yesterday's concerned, we did pop up. If you didn't sell the market right away, which I don't know why would you, unless you're just quickly scalping, because there's no cue really to short the market up in this area here, unless you took that low at 167.30 and that break lower for a short. That would have been a good short if you're indexing, if you're trading the index. But again, a lot of stocks were very quiet yesterday. Indexes are the ones that have really been moving lately, of late. So diamonds, take a look at the diamonds here. Again, pop up. Held in pretty well. Again, nothing really to talk about as far as a lot of these indexes. Transports here are relatively weak again, starting to show some weakness for the under indexes that we follow. So interesting to see what happens here in the next couple days. I personally would like to see the market price take out the 20-day moving average on all of the 5 indices that we follow. And here we go here, 96.52 will be that area. And again, Doji Star and the IWMs held up the best out of all of them actually in the Russell. And Russell has been weaker, has been weaker than the other indexes. So this one today held up a little bit better. Goldman Sachs, nice big long-legged doji, back up into this area. And as you can see, you notice how volatility is starting to pick up. Candles are getting larger. So we'll just see what happens with Goldman. Again, pay attention to a lot of the big cap tech yesterday actually started to sell off a little bit. We had Amazon had a great day, and then they started rolling over. Apple was up 5, it rolled over. So, LinkedIn. So all of those big cap techs, keep an eye on them. You really get a good handle on what's happening. XLF, same thing. We're still inside now. We got back into the channel. Okay, bullish. We're back above the 8-day moving average, which is also bullish. So I would not be looking to short any banks as of yet. If anything, you want to look to buy dips on strong stocks here. That's really still the way to go at the moment. And here's Apple on the daily chart. We did get a green candle. Lost all of its momentum and actually turned red on the day. So we'll just see. Take it one step at a time. Right now, the good thing about Apple is it's holding 418. That's exactly what we want to see. We want to hold 418. If we start to break lower and break the 20-day moving average, then I think you're going to get a retest of the 418, and that's going to really need to hold. Otherwise, this inverted head and shoulders is just going to play out into a bearish pattern here. So we'll just see what happens. But again, Apple didn't look too great. A lot of big cap tech didn't look too rosy yesterday as well. And lastly is the Qs. As you can see here, they get a pop-up, and we're still holding above the 8-day moving average. And that's pretty surprising to see. A lot of big cap tech started showing signs of weakness. So we'll see what happens. Again, guys, keep an eye on the bonds. Watch what the other sectors are doing as well. We don't have much today. We just have MBA mortgages coming out. So mostly it's going to be trading on technicals today. So, be abreast. Be on your toes, because like I said, anything can happen. Anyone could say anything, and then this market could easily roll over. And what happens is fear is greater than greed. And when you have fear in the markets, it moves really, really fast. So you really need to be on your toes if you want to catch that move for the day. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.